Hello and welcome to another regulatory wrap. In our last episode, we looked at that $350 million fine issued for having considerable gaps in trading data and surveillance programs. This fine continues to send waves of concern through the industry and raises questions around how firms can ensure their data sets are complete and compliant. To look forward, we're actually going to look back to the FCA's Market Watch 68, published in November 2021. In it, the FCA flags several potential compliance risks from digital trading venues 3 years before the JP Morgan case brought these risks to the fore. Market Watch 68 looked at how some digital trading venues interact with firms' existing trading systems, but others connect via web-based GUIs. Unless this is clearly articulated to surveillance, this means that data from some venues, like order messages and some communications data, is not included as part of a firm's existing data capture solution. The FCA expressed concern that this would mean firms would be unable to identify potential market abuse, conduct surveillance, or meet record-keeping requirements. The regulator also flagged questions about users' compliance and surveillance teams having different levels of knowledge of trading venues and the surveillance gaps this could present. Was Market Watch 68 foreboding of things to come? And will we potentially see the FCA making similar moves to the OCC based on these concerns? Time will tell. Not wishing to sound wise after the event, but this put firms in a difficult position. They may have front office staff that are trading via different venues or platforms to the ones surveillance teams are aware of, or they may be operating in a way that means their data, including trade data and communications data, is not being retained compliantly. It's likely firms will be rushing to review the completeness of their data sets and then needing to perform retrospective lookbacks at the missing data. And this could result in huge amounts of data being shunted through surveillance workflows to look for relevant risks, something already overworked and under-resourced compliance surveillance teams will have to deal with. We might also see firms queuing up to self-report in a similar way to JP Morgan to get out in front of any regulatory scrutiny. Will questions also be asked about who should be responsible for these surveillance decisions? Interesting times, and perhaps an opportunity to ask, are you confident that your data sets are complete, compliant and regulator ready? Join us next time for another regulatory wrap.